one of the, I feel like, narratives that came out of the last year, and perhaps shame on me because I kind of pushed this in my Liquidity Cascades paper as well, though I don't think I have that much influence, has been the sort of tail wagging the dog narrative around markets, both in the individual stock complex as well as at the index level, right? So not to name names, but Jem Carson, for example, has been on Twitter very prominently discussing how Vanna flows and Gamma is highly influential in short-term impact on the market and forecasting key market levels. There's other people who are saying, no, that's not true whatsoever. There is no tail wagging the dog. Curious as to where you sort of come down on it's all derivatives and has always been derivatives moving the market, and no, derivatives aren't having an impact. Where are you sort of on the spectrum?
I mean, certainly somewhere in between, and that's not probably, I think so is everybody, one way or another, right? I mean, a great example, I think I tweeted on, was it Monday, the day that we had the last decent sized sell-off, something about the amount, the market was very long Gamma, we're very long Gamma, right? We're always the same way as the dealer community, and in long short dated Gamma on the back of all this overwriting flow. We were going to have a lot to buy, so my sense was like, I don't know how we have a big sell-off right here from whatever exactly is going on, and then go ahead, we went down 2.1%, right? Even then, we had to buy a lot of equities that day to just get back to flat, right? But obviously, like, if there's really big fundamentally motivated selling or whatever it is, macro guys were out dumping tech exposure on the back of rates rallying, like, if there's really large selling or buying on a net basis by the investor community, of course that's going to be much bigger than whatever's going on in derivatives markets, right? But certainly on the margin, the positioning of net positioning that has to be hedged in derivatives markets can absolutely be impactful. There's maybe there was, and you have to have your models and come up with these kind of things, right? But maybe on that day there was $50 billion of stock buying by dynamic hedgers who were long Gamma, right? That's a lot. And clearly you can still make markets go down 2%, even with $50 billion of hedging by folks like us.